Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. Welcome to the inaugural show of Kaiser Watch, John.
Jim, it feels really good to have my own show, Kaiser Watch.
John, with this being the first episode of Kaiser Watch, which replaces Discovery Watch, whose final episode was during the last week of 2021 on HowStreet.com, what changes can Discovery Watch listeners expect from Kaiser Watch?
Kaiser Watch will give me a much more flexible format than Discovery Watch, which was focused on specific companies that were either in the midst of a discovery or were supposed to deliver a discovery by drilling some drill target. The format here will be one where we start off with a general topic type question. For example, one of the things I'm thinking hard about now is the Russia-Ukraine situation. What happens if Russia does invade the Ukraine? What are the possible responses, and how does that relate to the resource juniors? So that would be the first part. Then another big change that's part of my subscription business is at the start of 2022, I stopped having favorites as recommendations for my paid customer base. Kaiser Research is now a do-it-yourself research platform that covers all the Australian Canadian companies, but it's also a bottom fish workshop where I've tagged about 175 companies as qualified to be bottom fish. These are companies that have some missing piece that needs to be filled before they can really take off and be a formal recommendation. So that's what people are going to be paying the $450 a year for, to get access to all those research tools and the commentaries on the bottom fish. But the favorites from 30 last year that were for subscribers only, I've reduced that to an opening collection of 8 favorites that are going to be unrestricted. And in the second part of Kaiser Watch, we're going to talk about developments that have affected any of these favorites during the past week or so. And in the third part, we'll do kind of a sneak preview of a question along the lines, is anything interesting happening in our bottom fish workshop? And that'll give me a chance to market people the idea that, hey, maybe you should also subscribe and not just watch the free stuff, but also plug in and see what's going on with the really cheap juniors, resource juniors that we call bottom fish.
Okay, so to get started, you mentioned the Russia-Ukraine conflict or possible armed conflict. What are the potential implications for the resource juniors if Russia decides to invade the Ukraine using force?
Well, the United States really has only 3 options. The first is to basically do nothing, and that's going to be very problematic because it will continue the theme that Trump pushed, that the United States is becoming more of an isolationist nation. It's no longer supporting its European allies. And I think that will be very positive for the price of gold, because people will realize that the U.S. dollar will not be the reserve currency for the world in the long run. They'll look at gold as a way to hedge the uncertainty of a diminished role by the United States as it steps back from being the biggest economic and military superpower. But I don't think the United States can afford that response, so that response is unlikely. The second response is to impose severe economic, financial sanctions, much tougher than what they did in 2014 when Russia annexed Crimea. And the question will be, how does that impact everybody? I think what nobody's really thinking about that is, if you take a Russian raw material supply offline, don't allow them to move it to the various targets in the global market, you will also suffer pain. It isn't just going to be the oligarchs who start losing money because they can't move their product, but it will also be the users of the nickel, the palladium, the natural gas that Russia exports, because it produces far more than it needs for domestic consumption. And that's, I think, one of the scenarios that's going to be very positive for the resource juniors, especially the ones that are going to be involved with non-precious metals. I think at the same time, We will see inflation get an extra boost when nickel is, say, at a higher price as a result of these sanctions, shutting down Russian supply. But this inflation will also help gold. So we could also get a gold bounce out of that. The third response is one where the United States mobilizes a military response. And that's the one I don't even want to think about, because that could escalate into a major problem. The best scenario in this regard would be that they simply bankroll the Ukrainian resistance to the Russian invasion and supply all the arms, and have kind of a civil war, a proxy war between Russia and the United States. But I don't think Putin really wants to risk that. This would be something similar to 1979, Christmas Eve, when Russia decided to invade Afghanistan, and that turned out to be a very big problem for Russia in the long run. But during that time when that happened, the United States itself sort of stood by and didn't really have anything to do, and that was a period when gold also took off. So it'll be interesting to see what Putin does. He wrote this letter in July of last year, arguing that Ukrainians and Russians are one and the same. They need to be one country. But he's also really trying to re-extend the influence of the Soviet Empire back into all those Central Asian nations and into Eastern Europe. And that's an agenda where the West is not going to accept it. Ukraine itself has, once it was independent in 1991, has fought to be a democracy, has resisted attempts to become an autocracy. And I think this is going to be a major confrontation between the push for autocracy and the desire to preserve democracy in the free part of the world.
Your initial 2022 favorites collection currently has 8 picks in it. Let's talk about a couple of them and how they might be affected by the 3 American possible responses to a Russian invasion of Ukraine. How would they affect Perpetua Gold Corp?
Well, Perpetua Gold Corp, we've started calling Perpetual Permitting Corporation. It wants to put into production the 20,000 ton per day open pit mine, the Stibnite mine, which would produce gold and an antimony byproduct in Idaho. And it was supposed to have a permit by the middle of, or by late last year, but then they ended up getting new hoops thrown at them last year. Now the prediction is that the permit won't arrive until the second half of 2023, which means another year and a half of treading water, submitting variations to the original plan, and just dealing with the processing entities. And the market has punished this company severely. It's trading around between $5 and $6 a share Canadian, based on 65 million shares fully diluted. But based on the feasibility study that they published at the end of 2020, even at the base case price, it implies a stock price between $15 and $24. And if you plug in today's 18.43 gold price, that jumps to 23 to 34. And the market's punishing this company because it perceives that this permit will never happen. But if the United States does nothing in response to a Russian invasion of the Ukraine, and gold starts to rise in response at this feeling that, the United States is no longer going to pull its weight as the leader of the free world, then you will see this stock start to rise, simply because it's such an obvious proxy for the price of gold. And obviously in a situation where the United States is going to stand down and Russia is going to extend its sphere of influence, and China is also going to see this as an opportunity to maybe get on with annexing Taiwan, we're going to see the assumptions about globalized supply of raw materials really go down the toilet. And that's where the antimony byproduct credit becomes really important. There's a lot of sort of fake NGO resistance to this project. It's actually a plan to reclaim what is a disaster, environmental disaster site created by the American military response to in World War II. They mined antimony from this project. Later, gold was mined, and that was before the EPA was created and rules invented to have more responsible mining practices, which, of course, the whole mining plan right now conforms to all these contemporary expectations. So China and Russia together, they represent a staggering 85% of antimony supply. So if Russia starts to form a liaison with China, or China independently does something to alienate the United States, there's a whole list of commodities that these two countries produce that will perhaps not be available. And that will really put the spotlight on why are we holding up this project. Yes, the antimony is a fraction of the revenue that the gold would produce, but there's more than enough that could be produced annually to take care of America's needs and our allies, who are also going to end up not getting the antimony supply that they need. So this situation here, I think, will help Perpetua Gold Corp in 2022. It's not going to accelerate the permitting cycle, but maybe instead of this being a perpetual postponement of when we're going to accept all your filings and grant the approval, maybe this is the year that it will actually get done, and in which case this stock will end up being a $20, $30 stock, probably bought out by a major who wants to develop the stibnite mine. And that's why I have it as a favorite in there at around $5, what it closed at the end of the year. And it's a stock that you can also feel good about. Sometimes people question about gold. Do we really need more gold coming out of the ground? But in this case, the gold funds the restoration of a watershed which is not accessible to migrating salmon. This is something that the Nez Perce should be particularly keen about, rather than just using this as an excuse to complain about grievances that are not related to this particular project. And I think investors will embrace this company because it is not just a hole in the ground mining more gold, which existing gold holders wish wouldn't happen because they want the price of gold to go up, because the amount of gold, above ground gold stock, is fixed like the amount of Bitcoin are.
The other favorite that caught my eye is FPX Nickel. Russia's giant Norilsk Mine is a major supplier of nickel, and that facility is one of the dirtiest polluters in the world. How would a sanctions response affect FPX Nickel?
Well, Russia produces about 11% of the world's nickel supply, 43% of the palladium supply, which comes from that same nickel Norilsk mine, and there's also a meaningful platinum portion, about 13%. So if we end up in a sanction situation and Russia can't sell platinum and palladium and nickel to the rest of the world, then we're going to see the prices of these metals rise substantially. Now, FPX Nickel Corp also has another dimension to itself. And one of the big issues these days is that the current favorite electric vehicle battery requires a fair amount of nickel in the cathode. And the groups like Tesla and that who are marketing electric vehicles, they're doing it as a solution to the global warming problem. What can you do to reduce your carbon footprint? Well, you can spend extra money to have a Tesla or some other electric vehicle, and that is your contribution. You're sacrificing a bit of your income for whatever headaches come with this, but for the moment, it's also cool to have a Tesla. Here in the Bay Area, I see lots of them, and they do stand out compared to other cars. But if your nickel comes from the LME warehouse into which Russia has fed its nickel that is smelted from the sulfides that it mines at Norilsk under very dirty conditions, you're not really doing that much by buying a Tesla. You're contributing to a big carbon footprint. You got to calculate all the costs of these inputs. And so groups like Tesla have been looking around for clean sources of nickel. They're looking at the Goro project in New Caledonia, but that's a laterite process, and that has a very high carbon footprint. Plus, there are all kinds of legacy issues in New Caledonia. It recently had some sort of verbal agreement with Talon Metals, which is developing the Tamarack nickel deposit in Minnesota, whereby it's supposed to be able to buy the nickel from at an LME-linked price, but that's also going to be a concentrate, and if it disappears into a smelter with a big footprint, that nickel will also have a high carbon footprint and not be that clean at all. So unless Talon develops a special extension to its flow sheet where it converts its nickel concentrate directly into nickel sulfate. And this is where the FPX Nickel Corp story is such a fantastic story. This is the lowest grade nickel deposit in the world that has ever been proposed to be put into production. It's giant. It's 1.5 billion tons. They would propose to mine at average grade of about 0.12% nickel, 1.5 billion tons at 120,000 tons per day. It's a simple flow sheet. You grind it, you do magnetic separation, and then you float the concentrate to produce a ferronickel concentrate between 60 and 65% nickel, which is a direct feed for the stainless steel sector. Now, the stainless steel sector right now doesn't care that much about the ESG credentials of its nickel supply. That could still come. But what the company is doing right now is a sort of a pre-feasibility study on a process for making nickel and cobalt sulfate directly from this ferronickel concentrate. And this would be a much shorter step than what is done normally. Right now, nickel sulfate is made from refined nickel, basically redissolving it and adding more to the whole carbon footprint, or it's as part of an extension of the laterite process, which without ever bringing it to a smelter. These are all high carbon footprint methods, but this method would have the lowest carbon footprint per pound of nickel sulfate produced in the world. Now, we won't know until early third quarter, July or so, what the result of this study is. It's possible that it may be just too expensive to make the nickel sulfate from the ferronickel. On the other hand, if it turns out to be cost competitive, then groups like Tesla have a reason to take a hard look at FPX Nickel's Dakar project, and they produced a PEA for it in September of 2020, and they used the 775 the base case price for nickel. The price is over $10 a pound today. When I run that model, the range, whether if you use 10%, the NPV would be about $12.20. If you use 5%, it would be $27. So if you took the $10 a pound price as real, then you would have a stock that would eventually be worth somewhere between $12 and $26. Right now, of course, they're still at the pre-feasibility study stage, which is fully funded. They now expect it probably mid-2023 to have that completed. This is a relatively simple project, so you're not going to have all these unpleasant surprises that when you get into the details of a deposit, things change and you have higher mining costs. This is a big bulk mining scenario. And what's really interesting about it is because the tailings are magnesium rich, they naturally absorb carbon dioxide, basically pack it permanently. So that it's a carbon storage system, and they're looking at doing studies on ways to agitate the material and all that to accelerate the carbon dioxide absorption process. So it's conceivable that this project could achieve the holy grail of a mining operation that is carbon neutral. But even if they don't get there, the fact that they can have the lowest carbon footprint amongst all the nickel operations, this makes the project very interesting to groups like Tesla, not necessarily to develop it, but to perhaps step in and do a major investment over the next year or so that the company can raise the money if necessary to go to the feasibility study stage in case the big guys like Vale and Rio Tinto and BHP decide that they don't want to touch this yet. Right now the stock is only 60 cents. If you do the adjustment for the fact that it's still at the pre-feasibility stage, the stock should be 25 to 50% of the NPV. So I'm saying the stock should at a minimum be $2 to $3 right now, just waiting for it to plod through this pre-feasibility study stage. And if the whole Russian situation causes nickel prices to go higher, and Russia simply diverts its nickel supply to China, which has fairly large and growing nickel demand and is also building its electric vehicle sector out even faster than anybody else in the world because they have such an oil import dependency that getting away from gasoline as the primary transportation fuel, that is of major strategic importance to China. So FPX Nickel is one of our 2022 favorites with a stock that as people start to realize that this deposit's very different. It's a natural stainless steel that is the source of the nickel. There's no acid drainage from the sulfides. There's no other impurities. And if they can show that this can also be a source of verifiable, clean nickel and cobalt sulfate, that's going to be of big interest to intermediary investors such as the car makers who want to be able to be guaranteed that if the battery that becomes the mainstream battery in 2030 and beyond does include nickel, that they have a clean, verifiably clean supply of nickel available to it. It doesn't have to happen. The project's valuation or economic assumptions right now assume that all of the output will be fed directly into the stainless steel mills, and stainless steel demand is never going to go away. In the long run, as long as the global economy is growing, it will continue to rise.
Anything special to report from the Bottom Fish Workshop?
Well, Jim, one of the companies that was a favorite last year, Norilsk Gold Corp, I decided not to include it in the 2022 batch of free favorites because there was still a missing piece in the form of, well, the company will need to raise additional money to fund its expanded exploration program at the Reliance project. And there's also the question of what is the geometry of the Imperial, the Eagle, and the Eagle South zones that are developing within that Treasure Shear corridor, which runs about 1.5 kilometers and about 300 meters wide. But during the past couple of weeks, they put out 2 press releases as the assays finally start to catch up, and we're starting to see take shape a deposit system that's near vertical in the Imperial area. We're expecting several more holes extending that to the southeast, and the Eagle Zone is a flat-lying system. I've done the latest results that they just published for hole 18 and 19. I can do kind of a back of the napkin calculation and see that there's probably 200 to 400,000 ounces already implied in this segment. The thing that's held the market back is because it dips at 35 degrees towards the southwest, where there is a thrust fault that's basically cut everything off, there is not much tonnage running room. But in the Eagle South, where they just reported the best ever hole for the project, the rock turns into a melange, a real dog's breakfast, everything mashed up, ground up. And they've got at least one more hole coming on that section where they pulled that hot hole, which will help them get a sense for the geometry. They don't know whether what they reported was true width, but they are suspecting that maybe the zone steepens again in this area. And if we get evidence of that, that would be very significant, because then this limiting factor of, well, these shallow dipping zones run out of room heading towards the west because the thrust fault cuts it off. Then you start saying, well, no, you can just chase this deeper 1,000, 2,000 meters, because this is an orogenic gold system, and they're fairly high up in the epizonal part of these systems. So there's plenty to go before they even reach where the 4 million ounce Braylorn system sits, which is about 10 kilometers or so to the west of this project. So this is the sort of a bottom fish which has perked up in the last while. If we get further confirmation of this and get a financing announced that takes care of the program they want to do in 2022, then this one would definitely be pushed into the free favorite KRO 2022 favorite group of companies.
John, thanks for putting together this inaugural show for Kaiser Watch.
You're welcome, Jim.
We've been talking with John Kaiser, his website kaiserresearch.com. I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.